Welcome to Global Trends. Please subscribe and hit the bell icon for more breaking updates. In a stunning and unexpected move, China has abruptly severed a $5 billion annual trade route with Canada, sending shockwaves through both nations' economies and leaving global markets reeling. The decision, announced with little warning, has caught Canadian officials and business leaders off guard, forcing them to confront a new and uncertain reality. Almost overnight, Canada has been plunged into economic turmoil. The sudden halt in trade has triggered a sharp decline in stock markets, and the mood in boardrooms and government offices across the country is one of deep concern and anxiety. The shutdown, which specifically targets Canadian crude oil exports, has left government officials scrambling to respond. Emergency meetings are underway as industries brace for the far-reaching impact, with energy companies and their workers facing an uncertain future. This trade relationship was never just about economics. It was a cornerstone of Canada's strategy to diversify its markets and counterbalance a protectionist United States. For years, policymakers saw China as a vital partner in securing Canada's economic independence. Now, that plan has backfired dramatically, exposing the risks and vulnerabilities of relying so heavily on a single, unpredictable trading partner. The consequences are rippling through every sector of the economy. The closure is a stark reminder that in today's interconnected world, geopolitics can upend economic fortunes overnight. What seemed like a stable arrangement yesterday can unravel in an instant, leaving businesses and families scrambling to adapt. For workers and communities tied to the energy sector, this isn't just an abstract policy debate, it's a looming crisis that threatens jobs, local economies, and the stability of entire regions. The uncertainty is palpable on the ground. The loss of $5 billion isn't just a number on a balance sheet, it represents real livelihoods at stake, small businesses on the brink, and public services like schools and hospitals facing painful budget cuts. Families across the country are now worried about their future. As the nation holds its breath, Canadians are left to wonder, what comes next in this high-stakes global standoff? The decisions made in the coming days will shape the country's economic destiny for years to come. The roots of this crisis trace back to early 2025, a year that would mark a turning point in Canada's economic history. It was a time when the world was already grappling with shifting alliances and growing uncertainty in global markets. For decades, Canada had relied on its southern neighbor, the United States, as its primary trading partner, enjoying relatively stable access to the world's largest consumer market. But everything changed when the US slapped steep tariffs on Canadian goods, abruptly shutting out Canadian producers from their most important market. The move sent shockwaves through Canadian industries, leaving businesses scrambling to find alternatives and threatening thousands of jobs across the country. Desperate for new markets and eager to keep its economy afloat, Canada pivoted to China. The Asian giant's insatiable demand for energy and raw materials seemed like a lifeline, promising a new era of prosperity for Canadian exporters. Government officials and business leaders saw opportunity and moved quickly to forge new deals. In just a few short years, billions in trade shifted from the US to China, with government backing and industry enthusiasm fueling the transition. Canadian companies retooled their operations, and new trade routes were established almost overnight. The scale and speed of this shift were unprecedented in Canadian history. Canadian agriculture, from canola to pork, also found booming new markets in China. Farmers and food producers, once anxious about their future, now saw record demand for their products. Shipments of Canadian grain, meat, and other goods surged, and rural communities experienced a wave of optimism. For a while, the strategy worked: record sales, economic optimism, and a sense of independence from US trade policy. The Canadian stock market soared, and headlines celebrated the country's newfound economic resilience. It seemed as if Canada had finally broken free from its reliance on a single trading partner. But beneath the surface, this new reliance masked a dangerous vulnerability. Canada had simply traded one dependency for another. The risks of concentrating so much trade with a single country were largely ignored in the rush for growth. The opaque nature of China's politics and its willingness to use trade as leverage were underestimated. Decisions were often made behind closed doors, and Canadian officials found themselves with little influence over the terms of engagement. Now, the very lifeline meant to save Canadian industry has been cut, exposing the perils of over-reliance. Factories have gone quiet, ports sit idle, and the sense of security that once came with booming exports has vanished almost overnight. The lesson is clear. In global trade, there are no safe harbors. every partnership carries risks, and the search for stability can sometimes lead to even greater uncertainty. The Trans Mountain Pipeline, or TMX, was Canada's ticket to Asian energy markets, especially China. After years of struggle, the pipeline finally opened, promising access to global prices and thousands of jobs. The $5 billion in annual oil exports was supposed to transform the industry and boost government revenues. But with China's sudden shutdown, the pipeline sits underused, its business case in tatters. Oil destined for China now floods a saturated North American market, driving prices down and storage facilities to capacity. The project's $30 billion cost was justified by Chinese demand, now vanished. TMX stands as a monument to a geopolitical gamble gone wrong. The energy sector is left reeling, its most promising future blocked by a single foreign decree. The shockwaves from China's shutdown are rippling far beyond oil. Canadian farmers who had thrived on exports to China now fear they're next as trade tensions escalate. Shipping, rail, and port operators face collapsing demand, with investments in new infrastructure suddenly at risk. The entire supply chain from trucking to warehousing is under strain. Financial markets are rattled, with energy stocks plunging and investors wary of Canadian projects. Manufacturing, too, braces for fallout as a weakened energy sector drags down the broader economy. Government revenues shrink, threatening public spending and infrastructure. No sector is immune. A crisis in one industry is sending shockwaves across the nation. Across Canada, shock and anxiety are quickly giving way to anger and deepening frustration. The mood in cities and small towns alike is tense, as people grapple with the reality of a crisis that seems to have no clear end in sight. Families gather around televisions watching the news with growing concern, while others take to the streets demanding answers and accountability from those in power. In Alberta, the heart of Canada's energy sector, small businesses and workers are facing a wave of layoffs and bankruptcies as contracts dry up overnight. Once busy storefronts now stand deserted, and oil field workers who once fueled the economy are left idle, uncertain about their future and how they'll support their families. The TMX pipeline, which was once hailed as a beacon of hope and prosperity for the region, has become a stark reminder of broken promises and lost security. Abandoned equipment and halted construction sites now symbolize the dashed expectations of thousands who depended on the project. Union leaders are stepping forward, demanding urgent government intervention to protect jobs and families. They warn that without immediate action, the ripple effects will devastate entire communities, leaving workers with few options and little hope. Business groups echo these concerns, calling for clarity and a swift, coordinated diplomatic response to reopen trade with China. They argue that only decisive leadership can restore confidence and prevent further economic damage. Meanwhile, there's a growing sense among the public that Ottawa's high-level strategies have failed to protect ordinary Canadians. Many feel that government officials are out of touch with the struggles faced by everyday people, and that more should have been done to anticipate and prevent this crisis. In coffee shops and living rooms across the country, frustration is mounting. People are openly questioning how Canada became so vulnerable to foreign power plays, and whether leaders truly understand the stakes for families and communities. Headlines and daily conversations are now dominated by fear for jobs and the economy. The uncertainty is palpable, with many Canadians worried about how long the downturn will last and what it means for their livelihoods. At town halls and community events, citizens are demanding answers and a concrete plan to restore stability. Politicians are facing tough questions as people seek reassurance that their voices are being heard and their concerns addressed. This crisis is forcing a national reckoning about Canada's economic future. As the country stands at a crossroads, Canadians are left to wonder what comes next, and whether their leaders can guide them through these uncertain times. Under intense pressure, Ottawa scrambles for solutions. Diplomats rush to open talks with Beijing, hoping to reverse the shutdown. At the same time, Canada seeks support from allies, but recent U.S. tensions limit options. The government considers aid for affected industries and workers, short-term relief, but no fix for lost markets. Calls grow for a bold new trade strategy, fast-tracking deals with Southeast Asia, India, and Latin America. The crisis exposes the urgent need for true diversification, no more putting all eggs in one basket. Ottawa faces a tough reality. Rebuilding trust, finding new partners, and restoring confidence will take time. The choices made now will shape Canada's economic path for years to come. Canada stands at a crossroads, its economic future uncertain. Can diplomats salvage the Chinese trade route, or is this rupture permanent? If not, Canada must reckon with its diminished role as an energy exporter and the need for a new economic model. The crisis sparks debate. Can Canada remain independent while so entangled with global superpowers? The shutdown may be a catalyst for change, toward a more diversified, resilient, and innovative economy. The path ahead is fraught with challenges, but the decisions made now will echo for generations. Canada's next moves will define its destiny in a turbulent world.